This company listened to Wall Street when Wall Street complained about the seemingly never-ending spend on capital expenditures, and it's particularly on the metaverse. Welcome to the Drill Down Earnings. A quick look at the latest earnings from Meta. Yeah, this is the business story behind one stock on the move. I'm Cory Johnson, Futurum's chief market strategist. Meta earnings, the company behind, of course, Facebook, Instagram, WhatsApp. You might have used all these things today. Maybe even used a Meta Quest. That crazy thing on your face. Look, Meta reported fourth quarter earnings today, and Meta Quest wasn't a big part of it, but boy, these earnings were really, really good. Wall Street likes the language of miss or beat, and this was a beat, a big one. We want to dig into the business here behind the miss and the beat. And here's what the business said, the actual numbers. Meta sales up 25% year over year to $40 billion. Fantastic growth on some real big numbers already. And of course, most of those sales were in advertising. Advertising sales, $39 billion, up 24%. And net income, boy, it tells you a lot about the turnaround at Meta if you look at the chart of net income. If you look back 2 years ago, quarterly net income, quarterly profits were $10 billion, dipping down to $4 billion. Well, now they're back at $14 billion, and as I mentioned, growing quite quickly. The company announced a cash dividend of 50 cents, the first ever dividend, and one it intends to pay quarterly. Let's look a little bit deeper into the business behind the headline numbers. This company listened to Wall Street when Wall Street complained about the seemingly never-ending spend on capital expenditures, and it's particularly on the metaverse. Now, they're still spending a ton, but annual capital expenditures fell from $32 billion in 2022 to $28 billion in 2024. Yeah, that's still a ton of money, $28 billion, but with revenues going at a 25% clip and CapEx falling by 12%, that makes Meta an even more powerful business and able to do things like, buy back stock and pay dividends. Now, how did the stock react when the numbers and the news came out? Well, look at the chart. It went nuts. Stock was up 14% in after hours. And for the year, it means shares of Meta are now up 200%. It's incredible for such a big company. Now, a lot of the CapEx numbers I was talking about was spent on tilting at metaverse windmills, yes, but also spent on building out data centers for AI. And we've had a long and really detailed guidance about the range of spending at Meta, but it's one of the most transparent companies in all of Silicon Valley, maybe all of Wall Street. But on today's conference call, Meta's CFO, Susan Li, talked about the top end of that range of CapEx is going to be going up, and it's all about spending on AI. Here's Meta's CFO, Susan Li.
We're really continuing to evolve our AI roadmaps and ambitions and our understanding of the capacity demands that we might have as we train the next generations of foundation models and to support, all of the associated product development going forward. So the increase in the top end of the range really reflects that evolving understanding of how much demand we may need. And we're also continuing to keep a close eye on supply availability. Where we land in that range is a function of both the supply and demand factors I mentioned. And this continues to be a pretty dynamic planning process for us. And there are also certainly, other factors that drive uncertainty. How quickly can we execute on the new data center architecture, how the supply chain turns out to unfold over the course of the year. But our expectation is generally that we will need to invest more to support our AI work in the years ahead, and we're seeing some of that reflected in 2024.
So they've got a unique take on how to build a data center, what should go into it. It sounds like we're going to see a lot of that in the near future. But what does it all mean? What's the big drill down earnings takeaway? And what's the one number, the bite that tells us a whole lot about Meta? We'll have that right after this.
The Drill Down is brought to you by the Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
Okay, here's your quick drill down earnings takeaway on the just reported quarter from Meta. So Meta saw rapid growth of a very big business, putting up a fantastic calendar fourth quarter. Revenues were up 24%, and they spent a lot less money in the back end. Their CapEx spending came down, and going forward, that CapEx is really going to be focused not just on the metaverse, but on AI. And as I promised you, the Drill Down Earnings Bite, one number that tells us a whole lot. Ad impressions and price per ad were all up in the fourth quarter of 2023. Ad impressions increased by 21% year over year. That meant advertising revenue grew in every single user geography for Meta, so advertising revenue increase. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. Follow our quick earnings takes on Instagram or TikTok at the Drill Down Pod. At Drill Down Pod to be exact. And keep following our more robust earnings reports on YouTube. You can follow me at Twitter, X, at Cory TV. Follow, like, subscribe, and comment. We want to hear from you. Drill Down Earnings is part of the 6-5 Media Group.